Okay, so in chapter 4, we are going to be continuing the concept of job costing by talking about what's called activity-based costing. And just kind of remember that activity-based costing is really part of job costing. So if you go back to chapter 3, they talked about the two basic types of costing methods, which is process costing, which we're going to cover that in chapter 5. And then you've got the job costing, which is really chapter 3 and chapter 4. So if you kind of visualize this, really, again, chapter 3 and chapter 4 is all under this umbrella of job costing. The one big difference in this particular chapter is that we're going to be looking at multiple overhead rates in chapter 4, and it's going to be more of a cause and effect tie-in to allocating overhead. And so it's all going to be dependent upon the type of company, the type of different processes that they use to make the product would determine the type of costing method you're going to be using. But in this chapter, we'll be talking about this multiple rate idea called activity-based costing. But it's still, everything else is really the same. The cost flow is the same, journal entries are the same, product cost is the same. It's just the one big difference is we're going to have more rates to allocate overhead, and again, it's all about accuracy. Okay, so the first objective, we're going to talk about this thing called departmental overhead rates and show you how that one works. Again, that's very similar to chapter 3, except we're going to be using, again, multiple rates. In this case, it's going to be multiple department rates. Okay, so the plant-wide overhead rate, again, just a reference, that was really chapter 3. And that was using one overhead rate for all of operations. And again, sometimes that's not always the best thing to do. But here's the formula. This is review. The numerator is, again, your total estimated overhead is the numerator. The total estimated allocation base is the denominator. Again, this is how you get your rate. And then eventually you'll take this rate and then multiply it by an activity. Here's an example where they had $1 million of overhead. Their base was direct labor hours. So they divided it by the direct labor hours, and they got a rate that was $16 per direct labor hour. That's your rate. And then once you get that, you'll allocate that by multiplying it by the activity. And of course, that activity will be direct labor hours. So again, here's your example. If our rate, again, I'll just kind of simplify this. Here's your rate, and then here's the activity right here. And all they're doing is they're taking one rate times the activity to get the allocated overhead. So in this case, it was an elliptical and a treadmill, and they were using 10 hours on each of these products. So the amount of overhead that would go into each of them in this case would be $160. Now, when we get into what's called departmental overhead rates, it's the same formula, except the idea here is you may have more activities taking place in each department, whereas you want to be a little bit more accurate in assigning the overhead amount. So one overhead rate may not do it for each particular type of product you're making. So what you can do is you can have separate departmental overhead rates for each department. And so as you can see in this case, they say, okay, you had total plant-wide overheads $1 million. And if you look at, for example, the machining department versus the assembly department, you can see how you have different types of hours that go into making each type of product. Okay, so for example, the machining department for the elliptical might have 1 direct labor hour. For the treadmill, it might have 4 direct labor hours. For the assembly department, there may be 9 for elliptical or 6 for treadmill. So again, each product could have a different cause and effect tie-in. So again, what the several different department rate idea would be is it's a better cause and effect relationship, and it's all based on activities that are taking place. And the goal is to give you a more accurate allocation of overhead. So the question comes up, when should you use these departmental overhead rates? Well, obviously, if you look at the product you're making, in each department may have a different type of activity that generates overhead. That's when you typically want to maybe think about using it. You could have different jobs or products that use different resources, but it's really all about, the complexity of the department, what you're making, and that will determine if you have more activities taking place in one department versus another department. you might want to have different cost drivers prepared, so when you get to that allocation of the overhead, it's going to be more accurate when you go to compare it to the actual overhead. So in this example, notice you've got for machining, rather than just saying $1 million, they split $1 million between 400,000 goes to machining and 600,000 goes to assembly. Notice there's your $1 million. And then also notice we've got the departmental allocation base. Again, for machining they're using 12,500 hours, and for assembly they're using 50,000 hours. So they're doing a more tie-in of what are the specific direct labor hours for each department. And so for machining they would use $32 per hour, and for assembly they would use $12. So that would be your departmental overhead rates that you would use to allocate overhead on this example. So then again, for machining, you take that $32, here's your rate, and here's your activity, multiply that by 1, you get $32. For assembly, you take the $12 times 9 hours, you get 108. So that would be your allocated overhead for this particular job on the elliptical. For the treadmill, same thing. Notice you're tying in the specific direct labor hours for each particular department. Again, the rate times activity, 32 times 4 would be 128, 12 times 6 is 72, and so that would be the amount of overhead for the treadmill. And then if you go back and compare this to just using one overhead rate for everything, you'll see how the overhead allocation assignments do change for each particular product. So again, notice we came up with, I believe it was $160 for each of these, and when we switch to departmental overhead rates, you can see how the overhead allocation changed. The elliptical got 140 and the treadmill got 200. So if you're comparing apples to apples in terms of costing, 160 versus 140, we were overcosted for the elliptical. For the treadmill, 160 versus 200, we were undercosted for the treadmill. So you can see how it does affect product costing, which affects pricing, it affects customers, it could affect the company's ability to make money. Okay, so for this example, this is Kettle Snacks. They make potato chips, corn chips, and cheese puffs using 3 different production lines within the same manufacturing plant. Currently, Kettle uses a single plant-wide overhead rate to allocate its $3,315,000 of overhead. It says of this amount, $2,014,000 was associated with the potato chip line, $672 is with the corn chip, and $629 is with the cheese puff line. Kettle's plant is currently running a total of 17,000 machine hours, 10,600 in the chip line, 3,000 in the corn chip, and 3,400 in the cheese puff. Kettle considers machine hours to be the cost driver of manufacturing overhead costs. So right now, this is their overhead rate is based on machine hours only. So part 123, part 1 says compute the overhead rate, the single wide rate. That's going to be using the machine hours. And then part 2 says calculate the department overhead rates using these 3 production lines. And then it says part 3, which products have been overcosted, by the plant-wide rate, and which have been undercosted. So in the next couple slides, we'll walk you through the calculations. Okay, so this is again from chapter 3. You just take the estimated overhead, which was given, divided by the 17,000 machine hours. So this is the one overhead rate they would use for all activities based on machine hours for this particular example. Now, the $3,315,000 basically can be allocated among potato, corn, and cheese puffs. So the $3,315,000, that's your total. Notice how they've already given you the breakdown. And then of course, if you go back and look at the machine hours pertaining to each particular product line, you've got 10,006 for potato chips, 3,000 for corn, and 3,400 for cheese puffs. So you can basically divide these, and notice you get 3 different overhead rates that could be used for each particular department. And so then if you compare these to the plant-wide overhead rate, which we said was 195, just take the differences. Potato chips is off by $5. In that case, we would have been overcosted. Corn chips, $224. You can see how we got, what, $29 difference. So you're basically, you'd be under costed on that one, and then you're over costed on the cheese puffs by, it looks like it's $10. So again, you can see how these departmental rates are different than the one plant-wide overhead rate. And again, I'm just going to tie this in here. Again, the goal is all about accuracy. Okay, that's what you want. You want to be accurate. Okay, in the next part, we're going to talk about activity-based costing, and again, how to allocate those indirect costs to the job. Okay, now when you're looking at activity-based costing, again, it's the same idea. We're allocating our overhead, which they refer to here as indirect cost. That's our overhead to production, to the jobs. The focus, again, because it's called activity-based, is you have to know the activities and the cost of those activities that are taking place in the plant, in the job, in the product. Okay, that's the hard part, is to identify these activities. Once you've identified the activities, you can get the cost allocation basis. Then you have to come up with a way to assign the overhead cost to these activities. Okay, and at that point you would have an allocation rate for each activity. So this is very similar to the department overhead rates. You have, I'm going to write this, multiple overhead rates. It's the same idea, and it's all about, for each activity, it's cause and effect, and it should allow you to be more accurate in your allocations. So you can see in this particular example, they've given us a various numbers of activities. We've got machine setup, material handling, fabricating, supervising, inspecting, and packaging. Now, any company could have a wide variety of different types of activities. This particular one, it looks like we've got 6 activities. Notice we've got the overhead cost related. They've identified that, and then they put all these costs into pools. So notice, out of $1 million of total estimated overhead, this is how much would go to each activity. Again, this is your budget. $80,000 to machine setup, material handling gets $200,000, $300,000 goes to fabricating, and so forth. So once you know this, now you can start to figure out your rates. In this particular example, you would actually have 6 different overhead rates, because you have 6. You can label them 1, 2, 3, 4, 5, and 6. You have 6 different activities. So in this case, you're going to have 6 different individual overhead rates. And notice now we've got the activities. Notice it says at the top, total estimated amount of allocation base. I'm going to circle it. These numbers would represent your denominator in your overhead rate calculation. All you'd have to do is now take the dollar amounts, divide by these bases to get your 6 individual overhead rates. So here's the actual calculations. You can see how, here's the dollar amount, here's your cost, here's the base that they gave you, and you simply divide. So you'd have 80,000 divided by 8,000 setups, 200,000 divided by 400,000 parts, 300,000 divided by 12,500 machine hours, and it's pretty easy math. You just have to divide. Over here you get the rates. Notice we've got 6 rates. $10 per setup, 50 cents per part, $24 per machine hour, and so forth. And now we've got our rates. Then the next step would then be to take these rates and then multiply them by the activities like we've been doing to get the allocations. So here's how you'd allocate it. Again, here's our rates in this column. Here's our activity. And all you're doing, notice you're multiplying. 10 times 2, 50 cents times 20, 24 times 1, and so forth. And then once you've multiplied these, you have to add up the total. And then once you add these up, that's how you get the allocated overhead. Now, you'll see some consistencies in all the problems, but on this slide, they're just showing you some common examples of cost drivers for the allocation base. Typically, you can use purchase orders, number of parts, batches, inspections, pages copied, service calls, and so forth. And typically, these will be identified for you in the problems. And so, you'll see some consistency in the problems in terms of what they're using. So a lot of this just takes a little bit of practice, a little bit of repetition to get the basic idea of how this type of setup works. Okay, so for this particular example, this is short exercise 4-6. It says Salary Industries is a small family-run manufacturer. They've adopted ABC. The following manufacturing activities, indirect manufacturing cost, and usage of cost drivers have been estimated for the year. So everything here is estimates. So notice in this first column we have all of your overhead estimates. In this column we have all your cost drivers to go with each activity. Okay, so just as you sit here and look at this, if you were going to calculate some overhead rates, you're going to have three of them. You'll have one for machine setup, one for machining, machine hours, and one for quality control. All you're going to have to do is literally divide to get the rate. So they're going to set these up for you in this format, so it's going to make it nice and easy. Now, continue to read. During May, John and Allison Solari machined and assembled job 557. John worked a total of 12 hours on the job, Allison 4. John is paid $25 per hour, Allison's $28. Because of her additional experience. Direct materials used was $1,250. Then we got the following information. We've got 2 setups, 4 machine hours, 3 quality control tests. So they're giving you basically all of your product cost, or how to get the product cost. Step 1, part 1 is to get the rates. We'll do that. Part 2 is to get the cost of the job. And again, remember the cost of the job is going to be direct material, direct labor, and manufacturing overhead. So like I said before, you just have to divide to get the rates. So again, these are given on the previous slide. We just divide, and your rates turn out to be $55 per setup, $150 per machine hour, and $60 per quality control test. So then what you'll do with these rates is you'll take these rates times the activities that are on the job. You'll multiply that to get the allocated overhead to that particular job. So the second part was to get the cost of the job. And I'm going to label these very consistent from chapter 3. Product cost number 1 was given, direct materials. Product cost number 2, which is direct labor, you had to multiply the hours times their labor rate to get the direct labor cost, which was $412 in this case, because they gave you how much John and Allison were individually paid. And then to get the allocated overhead, you got 3 rates. So you got the $55, the $150 per machine hour, and the $60 for the control test. Those are your 3 rates. You're multiplying these by the individual activities on the job. You add those together, you get a total of $890. You then add up all your 3 product costs. You would basically say that this job would cost right at $2,552. Okay, so ABC can help you make decisions in your business by a couple things if you think about it. Again, ABC helps you come up with accurate product cost, which affects pricing of your product. It could also affect the different products you decide to continue to sell because of the cost and the pricing. And usually when you implement ABC, you do a huge analysis of your company's operations. And sometimes it can even allow you to eliminate departments or come up with more efficient ways to produce your product. And so it could also allow you to save money by cutting cost. And all this again does affect plan. Everything really is about planning and controlling when you're analyzing and looking at all the various different departments. Now you're going to find that one of the biggest issues with ABC is the cost of implementation. Okay. And so that's one thing you typically always look at as a company is what they call cost-benefit analysis. Do the cost or the benefits exceed the cost, basically? Okay. And I'll just say this right away. ABC can be expensive, very expensive to implement because oftentimes you have to hire consultants to come in. You have to do some studies. It takes a lot of time. And so the different types of companies that might want to use ABC might be types of companies that have a lot of different products, a lot of different types of processes in their production. They might have a lot of overhead cost, a lot of high and low volume types of products. So a more complex company might be better suited for ABC. If all you're doing in your company is picking apples or bananas, you may not need it. Okay. But lots of times, because you might have a lot of overhead, you might have a lot of different sorts of resources that are being used to produce the product, ABC might be suited to your particular company. So remember, ABC is more accurate than just one overhead rate because of the multiple rates. But it's not for every company. Not every company actually needs it. And again, it really does depend on the actual setup of what you're producing. A couple things here, again, generally when you do adopt it, you are using the accounting systems in place, you're using the available technology, and generally your costs typically do go down with this. There was a survey in terms of companies who did adopt it. Notice this 89% says it was worth it. But it's, again, not a cure-all, but it does help you because you really break down how all your costs are being generated. So it does help you understand where your costs are coming from, and then this can also lead to better decision makings in terms of cost cutting, planning, and efficiencies.